Hi traders, and welcome to my video on the Deliberation Candlestick pattern. In this video I'm going to show you how you can capture parts of moves like this for over 400 pips. So this is a Euro Dollar 4-hour chart in the MT4 trading platform. You can find Deliberation Candlesticks on any charting platform, any trading instrument, Forex, stocks, cryptos, commodities, indices, etc. And any chart time frame. This is a 4-hour chart. I prefer the higher chart time frames as I find the signals tend to be more reliable, primarily due to the fact that there's more price data included. Okay, so that being said, what is a deliberation candlestick pattern? Well, the first thing we're going to do is we're going to look for at least 3 bullish candles, okay? And then we're going to look for a reversal, a bearish reversal, when there is a red candle following these 3 bullish candles that breaks below the initial candle. Okay, so straight away we can see here there are 3 bullish candles, each higher than the other. And then we do have a bearish candle here. However, it doesn't break below the low of the first candle. That being said, it doesn't necessarily have to be the 4th candle. It can be the 5th, the 6th, so on and so forth. That breaks out below the initial candle. I mean, there are various ways to interpret the deliberation candlestick pattern, so I think it's important to clarify that this is my method of interpretation, but the principles are the same. Basically, the whole point in the deliberation candlestick pattern is for finding a support level, okay, which would be a support or resistance level, which for this particular move, if we're looking for reversal to the downside, the support level would be the initial bullish candle here. Another way it's open for interpretation is the number of candles involved in the pattern. Does it need to be 3 bullish candles? Can it be more? Is there an exact science behind it? Not necessarily. I mean, you can 1, 2, 3, 4. There's 4 candles there. I mean, if price reversed back down, we wouldn't necessarily avoid a trade just because there were 4 candles. Okay, and it's the opposite. That's for a bearish trade. What we just looked at, you had the 3 bullish candles, okay, followed by you're looking then for bearish candle that breaks below the low of the initial bullish candle. Vice versa for a buy trade. So we're looking for 3 bearish candles here. You can see big bearish candle, another bearish candle, and then a bearish candle there. That's actually a hammer as well. It's a 3 black crows formation, just as the 3 up is a 3 white soldiers formation. I do have videos on various candlestick patterns. Okay, so in this instance, we would look for a breakout to above the initial bearish candle. Okay, so we have the 3 bearish candles, and then we wait for a breakout above, and you can see this actually would have been a good trade because this is a strong resistance level. It's been tested multiple times. Bearing in mind, this is a 4-hour chart. Okay, so significant resistance, and you can see once price broke through, there was a nice move to the upside. Important to mention that the market was making higher lows, okay, and higher highs. Thus, we were in an uptrend. In fact, as far back as here, following on from that support level down there, which is why when we seen this particular setup here, I would not have personally. Remember the deliberation pattern we looked at earlier in the video, the 3 bullish candles there. Some traders would have used that support line to trade short, but we wouldn't trade short. Well, I wouldn't, because we're in an uptrend, so I'm only going to be looking for long trades. As you can see, that level of support is actually quite significant. Okay, so I would have avoided trading that. If anything, I would have been looking to get into this trend to the upside, and I would have drawn a nice wedge pattern there, seen price consolidate, and then look to enter on this breakout here. As you can see, no deliberation pattern. Actually, there is there. You have a deliberation pattern in there. You have 3 candles, bearish, 1, 2, 3. So you can draw your resistance, and that's an actual great example there. If I just move that resistance level, can you see here? 3 bearish candles, 1, 2, 3. First one's the biggest. Then we have the breakout above the first bearish candle, in line with the trend. Okay, so just to reiterate, I'd only take the trades in the direction of the trend. I'm only going to look for a bullish deliberation pattern, which would be the 3 bearish candles followed by the bullish breakout. Here, 3 bearish candles followed by the bullish breakout. Okay. So yeah, there's a few good opportunities. You could have entered that trade based on the Deliberation Candlestick pattern. Arguably here as well, if we take it as far back as this, you have 1, 2, 3 bearish candles. You do have the bullish one. It's not significant, but we can still use the top of the initial candle there. And you can see from that big bar, that's quite a significant breakout. In saying that, personally, we hadn't actually had the trend form yet, so I'd be more concerned with this level of resistance here and also this level of resistance here. Okay, this looks like a bit of a bear trap. Okay, so this would have been following this downtrend here. Traders would have been trying to jump in on this trend, but if they were selling here, they were selling too late as their stop losses get taken out and other traders who were in earlier on in this move start taking profits. You can see it just causes this big upwards momentum. And the bearish would trap get taken out and we can jump in on the breakout there, which is technically the deliberation pattern breakout, but also more importantly, this long-term level of resistance here. Okay. So just to reiterate, you don't have to only take trades where there's a deliberation candlestick pattern. It's good to be aware of. If you see it, it can add extra confirmation for your trade, but I prefer just to draw my own support and resistance levels because there will be instances where you might not take an opportunity to enter in on a trend just because there isn't a deliberation pattern. For example, here we can see that this is a good level of resistance over the 4-hour chart again, to reiterate. So this is 4, 8, 12, 16, 20, 24. That's like a day's worth of resistance there and a nice breakout to the upside. You can see from that big candle there were traders waiting for this particular breakout. Market was in a nice uptrend, making the higher lows. So I would have taken this trade even without the deliberation pattern. Okay, and the opposite for a downtrend. Okay, so lower highs. We've got this lower highs here, got this level of resistance, price begins falling. Double top candlestick formation there, draw the neckline, do a video on double tops, triple tops. Basically a double top is when resistance level is tested twice, at least twice, so 1, 2, and then the support within the double top pattern becomes what's known as the neckline. Okay, and a breakout of the neckline is a bearish signal. So we have that. Okay, and let's see if we can find a deliberation candlestick pattern here. 3 bullish bars we're looking for, and it doesn't actually look like there's one till here. You do have the 3 there, but you can see that level of, remember the level of support or resistance is the initial bar. So probably, but then you've got this support here you need to be wary of. And after this pullback here, this wouldn't have been valid. I would have liked to have seen a breakout straight away on that. And I would have had an eye really on this support area. So it just emphasizes that the deliberation candlestick pattern is not an exact science. It's not going to work every time, which is why it's important to use your own additional analysis for trade confirmation. Okay, just as there was opportunity to get in here to the downside, and I can't see a particular deliberation candlestick pattern. That being said, there is a pattern here where you have 1, 2, 3, 4, 5, 6, 7 bullish green candles. Okay, so I mean, after this resistance level was reached, price started to take a downturn. Traders may have been looking to get in on the breakout following on from those. So if we say this is a deliberation candlestick pattern, but 7 bars worth, okay, which is why I said earlier in the video it's open to interpretation. I mean, at the end of the day, in my opinion, all the deliberation candlestick pattern is doing is helping you find support and resistance. So I don't care whether it's 3, 7, or 20 candles. I'm just going to draw my level of support, and if it so happens to be a deliberation candlestick pattern, then so be it. You can see there's a nice breakout to the downside here, the market making lower highs and some left in this move. Okay, As always, make sure you've got good money management. Using a sensible stop loss. I like to cut losing trades short and let winning trades run, just to maximize good moves as much as possible. For example, had we taken this trade on the breakout here, I would have put my stop loss just below the low here of the trend line. Okay, and then as price moved up, I just try my stop below the lows, locking in the trade in case it turns back around. And we may have been taken out up here somewhere, but we've maximized the move as much as possible. You can even close part of the position on the way up just to bank some pips. And as you see the market start to make these lower highs, forming a new resistance level, these bearish candlestick patterns, then you can look to perhaps exit the trade. Just like I mentioned the bear trap earlier, I can see a bull trap here. Okay. And you see that? So we have the, I'll just remove this line just so it doesn't confuse you. This is nothing to do with the deliberation candlestick pattern, but I'm going to pick it out anyway because I can see it here. If I can get that line, it would be rude for me not to. So this bull trap here, you can see following on from this nice uptrend. Okay, we reached resistance. Traders still would have been looking to buy here. They've missed out on the trend. They're late to the party. They're trying to get in. They're buying against this resistance level. They're basically buying at the high. And what happens is their stops get taken out. Especially, I'm going to draw it again, especially after this breach of this resistant support level here. Stop losses are taken out. Traders who were in earlier on are exiting their positions up here for some nice profit. And it just causes momentum to the downside. You've got an M formation there as well. You see that letter M, up, down. Just extra confirmation that we're going to see a bearish move, which we do. Okay, so that's a bull trap. I do have videos on the bear and bull trap trading strategies respectively. And another thing about the deliberation candlestick pattern, I can see a nice entry here. Okay, there's no deliberation candlestick pattern there, but still for me, after these lower highs and the market falling, that would have been a valid entry, regardless of if there was a deliberation candlestick pattern. I mean, if we just move that level along longer, we can see this support has been tested a lot. Okay, so this just emphasizes the strength of support and resistance levels when combined with candlestick patterns, and of course, as always, good money management. One thing you don't want to do is have a stop loss of say 20 pips and a take profit of 20 pips. I mean, it's just going to make your life more difficult. Whereas if you can have a stop loss of say 20 pips, and I wouldn't even have a fixed take profit. I'm not going to say, okay, every trade I'm going to take and have a 20 pip stop loss and take 20 pips, okay? Or let's say 40 pips, a 2-to-1 risk to reward ratio, okay? So if we do that on this trade, we exit here, right? We could have doubled our pips, yeah, by not having a rigid take profit. We could have just let the trade play out and doubled the profit potential, okay? When I'm in a good position, I like to let the trade run. It's a good feeling to be in a trade with the stop loss move to say break even or break even plus some profit. So worst case scenario, if price does turn around, you've still banked a good amount of pips. There's no, as I said, no deliberation candlestick pattern here, but one thing I have noticed is there's a 3 inside down candlestick formation. Okay, so that's basically when you've got a bullish candle followed by a bearish candle that's at least 50% the body of the bullish, and a third candle that's bearish that breaks below the low of the bullish candle there. So I would have considered even entering here based on the 3 inside down pattern. Okay, there's a 3 inside up, which is basically the reverse in an uptrend. So again, to reiterate, I'll be taking trades in line with the trend. I don't want to trade against the trend. As they say, the trend is your friend. So yeah, hopefully you found something useful in this video that you can apply to your trading. No technical indicators were harmed in this video. I mean, I find they can be lagging and they can repaint. I prefer just to look at what the price is telling us and just trade price action, support and resistance, trend lines, along with good money management. And you can create a strong strategy with plenty of practice. Okay, thank you for watching. Please like and subscribe for more, and I'll catch you on the next one.